Hello everyone, and today we have the revelation that Michael Saylor has been lying to his investors at Strategy, and some of the big ones are selling off shares. And I don't know if that's going to put MicroStrategy in some trouble, but it definitely might. And it has to do with shares dilution of common stock. So I don't really like the idea of anyone selling off MicroStrategy, but I don't think it'll actually cause them any problems, but it might put them in a little bit of financial difficulty and may not allow them to buy Bitcoin because they have to raise money. And obviously, like the more their company's worth, the more money they can actually raise. So strategy loyalists sell MSTR, say Michael Saylor lied about dilution, which does not surprise me that he would lie about dilution, especially if he wants to raise more money. He changed some of the provisions. And let's see what this is. One of the top strategy, formerly MicroStrategy influencers, has sold his position and called founder MicroStrategy, Michael Saylor, a liar. That's right, Michael Saylor, liar. This guy is called Josh Mandel. He has over 140,000 followers on X, and he's frequently praised in subreddits for being a straight shooter on strategy. So Saylor decided to modify slide. Saylor does these slideshows, obviously, for his investors. Slide 96 of the company's July 31st earnings presentation. Critically, he changed the company's guidance to not dilute common stockholders, while MSTR trades at a multiple to net asset value (MNAV). So the MNAV has actually been going down, and that's because he's been diluting the shares. And essentially, like MNAV is a premium of the company's valuation, which obviously reflects in its stock price, over how much Bitcoin it earns. Now, the thing is, the MAV is still 1.55x the value of the 71.4 billion worth of BTC. So since he has 71.4 billion worth of BTC and the MNAV is worth 1.55x, the company is valued at like $110 billion or something like that. But this value, the MNAV, used to be twice as much. And because there were less shares. So as the months have passed, loyalists like Mandel have become fed up with the lengthy decline and downside decoupling of MSTR from the price of BTC. So, it's like crypto dilution, except this time it's with MicroStrategy. I would be kind of pissed off as an investor as well, because you told us you weren't going to dilute our common stock, and now you diluted it, and now the price per share has gone down. Now, there's two sides to this, because being able to issue new shares means they can actually issue more money to buy Bitcoin, which raises the share of the stock. Remember, the price of the stock is a multiplier of how much their Bitcoin is worth. Obviously, if they buy Bitcoin, then their base is higher, but their multiplier is lower. I think their multiplier used to be 2.5 and now it's just 1.55. And Saylor is continuing to issue more, so that multiplier is going to come down, and eventually it's most likely just going to be the value of their Bitcoin. Now, if it's just the value of their Bitcoin, that's a little bit weird to invest in MicroStrategy. So why would you just not buy Bitcoin instead? Because then it loses that volatility and the chance of bigger gains. So this guy sold off all the stock of MicroStrategy. I don't blame him, but if MicroStrategy, like I said, is worth less on the stock market, that does impede their ability to actually raise more money to buy more Bitcoin. Now, I personally don't really care about MicroStrategy's valuation, but that's not the point. MicroStrategy and Michael Saylor has been one of the biggest buyers of Bitcoin out there. And I think a lot of his buys are kind of what's keeping the crypto market afloat a lot of the time. So if he's not able to raise as much money because he's diluting his multiplier, and there won't be as many people buying his shares at such a high price, or his pre-issued shares at such a high price, he might not be able to raise the tens of billions of dollars to buy Bitcoin. Obviously, that's going to affect our Bitcoin buying pressure. Less Bitcoin buying pressure, that means our coins aren't going to be worth as much. Well, that means the market might actually go down, because institutions, mainly like MicroStrategy, that the price of Bitcoin has been able to stay up so much. So, and Saylor being the biggest buyer, if he actually falters, then there could be more downward pressure that doesn't get absorbed by Michael Saylor. And even though it's OTC, that definitely might hamper any kind of pump that we have. So although I do agree with him selling shares of MicroStrategy because Saylor flat out lied to them and now he's diluting their shares, I don't really like it because that might actually affect my bag. Now, I don't hold that much Bitcoin, but the fact is that Bitcoin controls all the other coins. And if Bitcoin goes down because Saylor isn't buying as much anymore because he can't issue the bonds or issue the stock to actually buy as much as he wants, obviously that's going to affect my altcoin bag as well. So not a great development for anyone in crypto. Sucks for the people that have the stock because they're being diluted, and Saylor should actually re-examine the strategy of issuing bonds or issuing stocks like crazy and then buying as much Bitcoin as possible, because if that multiplier gets diluted down, you're going to have lost the trust of a lot of your big investors. So there's that. That's not great news, and hopefully that does not bring the market down some more. But for some better news, there is someone trying to replace MicroStrategy. This is a Dutch firm that targets 1% of all Bitcoin with new treasury company. Now, 1% of all Bitcoin is 200,000 Bitcoin, less than half of MicroStrategy owns, but still a huge amount of Bitcoin. So they want to buy roughly about 210,000 Bitcoin when it's all said and done, and that could actually make up for MicroStrategy's lack of buying. So Netherlands-based crypto services company Amdex, that's the company, has revealed plans to launch a new Bitcoin-focused treasury firm, AMBTS BV, with the goal of taking it public on the Euronext Amsterdam. The new entity will be dedicated exclusively to Bitcoin accumulation and treasury management. AMBTS will operate with its own governance structure, raising capital from private investors in stages as it works towards an ambitious target, controlling as much as 1% of Bitcoin's total supply, which is a lot. I mean, 1% doesn't seem like a lot to a lot of people, but 210,000 Bitcoin, if Bitcoin was $100,000, which is above right now, you'd be looking at billions, I think like $24 billion. So far, only Strategy has managed to exceed the 1% threshold with about 3 times as much. Amdex says the initiative reflects the increasing appeal of Bitcoin for institutional investors, citing its low correlation with traditional assets, resilience against inflation, and growing adoption amid geopolitical uncertainty. So yes, this is going to sort of take the place of MicroStrategy's buys by basically absorbing some more of that sell pressure. And that's really, really good for us. Something else that might absorb the sell pressure is the Fed itself, and specifically the people that are actually on the Fed. So Fed's executive Bowman campaigns for central bank staff to own crypto. So she wants the people on the Fed to own crypto. Now, if the people on the Fed own crypto, they're much more likely to make pro-crypto decisions. So Fed Vice Chair Michelle Bowman proposed allowing central bank staff to hold small amounts of crypto. Now, we don't really know what a small amount is, but if you have like tens or hundreds of thousands of dollars in crypto and you're on the Fed, you might be more likely to vote for interest rate cuts because you want your bags to pump. Current Fed rules, and this is true if you didn't know, prohibit its staff from holding cryptocurrencies, but that might change soon as Federal Executive Bowman pushes for ownership rights for the Fed bank staff. Bowman pushed for crypto ownership rights for the central bank staff. The Federal Reserve Chair, Vice Chair for Supervision, on Tuesday suggested that staff at the central bank should be allowed to hold small amounts of cryptocurrency, saying that direct exposure would help regulators better understand the markets they choose. Obviously, this would align the Fed people with the interest of crypto. If Jerome Powell had billions of dollars of Bitcoin, he might just think about cutting interest rates a little bit more. And this is at the Jackson Hole Symposium, so they are talking about stuff like this. Speaking at the Wyoming Blockchain Symposium, Bowman argued that first-hand use of digital assets would provide valuable insight for examiners tasked with policing crypto-related activities in banks and financial institutions. Current Fed rules prohibit its staff from owning cryptocurrencies. There's no replacement for experimenting and understanding how that ownership and transfer process flows, Bowman said. I certainly wouldn't trust someone to teach me to ski if they've never put on skis, regardless of how many books and articles they have read on it. So basically, she's saying that the Fed needs experience in this, and allowing them to hold a little bit of crypto would actually allow them to have experience in this. And there's a call for a cultural change in financial regulation. We must choose whether to embrace the change and help shape a framework that will be reliable and durable, ensuring safety and soundness and incorporating the benefits of both efficiency and speed, or to stand still and allow new technology to bypass the traditional banking system altogether. Bowman acknowledged that certain risks accompany technological changes, risks that may be offset or at least determined to be manageable when we recognize and consider the potentially expensive benefits of new technology. So obviously, people are afraid, the critics are afraid that like Fed people, if they own crypto, would actually make pro-crypto regulations based on their own economic interests. Obviously, that's still good for us because if they make more pro-crypto regulation, especially in terms of monetary policy, our bags pump no matter what their actual reason is for doing such. So that's another thing that could possibly be possibly absorb the pressure if this is actually passed and Fed people start buying crypto. It's not so much the Fed people are going to buy so much crypto that that's going to tip the scales. It's the fact that now that they own crypto, they're going to make more pro-crypto decisions because that benefits them personally. And, despite, all the experience and all that other stuff that they speak of here, I do think, like, behind it all, that is actually one of the purposes to make them more pro-crypto. Because, you see Congress, they're allowed to own crypto now. A lot of them own crypto, and they are a lot more pro-crypto. So it probably works with the Fed governors and the Fed commissioners in the same way. Another piece of news is that MetaMask, one of the biggest crypto wallet services, they've actually made a big move. And the big beneficiary here is Tron. And MetaMask is an Ethereum wallet, but they've added the Tron blockchain. This will help with Tron's onboarding users and liquidity. The integration allows users to connect directly to Tron's blockchain. I do actually think it will actually help them do like cross-chain swaps as well, thereby sucking some of the users from Ethereum. And we know that, Ethereum users aren't shy about leaving for Tron because most of them ditched USDT on Ethereum for USDT for Tron. So, and it is one of the busiest networks for stablecoin payments. The collaboration signals a major step for MetaMask as it accelerates efforts to move beyond its Ethereum origins. The wallet has already rolled out support for Solana and SCI, with Bitcoin integration expected before the end of 2025. By linking with Tron, MetaMask is reinforcing its role as the go-to portal for Web3, while also strengthening ties with regions where Tron dominates digital payments. So Tron's ecosystem has become a cornerstone of stablecoin usage globally, particularly for Tether. The network processes roughly $22 billion in value daily and handles close to 9 million transactions every day, making it one of the most active blockchains worldwide. So yes, Tron is going to benefit a lot from this, so it could possibly go up again. It could do very, very well in this bull run. I was already pretty bullish about Tron for this bull run, but little things like this make me a little bit more bullish. It's not like it's going to skyrocket because of this, but it will actually help it kind of absorb some of Ethereum's advantages and maybe even gain some of Ethereum's users, as they did when, Tether came to Tron and people kind of abandoned Tether on Ethereum for Tether over Tron. I think like this will probably help some of Tron's DeFi apps, making it directly swappable with, the stuff in Ethereum with the TRC20 stuff, because the TRC20 stuff obviously is going to operate faster than the ERC20 stuff that's not on layer 2. And obviously opening up a gateway just removes one step from coming over from Ethereum to Tron. If it's all seamless and on MetaMask, they're much more likely to do so. So if you look at the chart today, you can look at Bitcoin price here. The MACD on the daily has dropped negative. The weekly is still positive, but it has dropped negative. But this honestly looks more like May through July, where we're just kind of like in kind of a slump right after we come up. And this actually looks better than May through July. I don't know if the second dip's going to last that long, and I do think we're going to head to 135 afterwards. I don't think this is going to be, the other chance is this could actually be like February through April. But I really don't think that's going to be the case because we don't have like sudden tariff announcements. And because of that, I definitely think that we're not going to go for that. And although PPI is very high, CPI is still low. We might get another small shock, in a week or two. But I think overall we are going to go up much, much higher. I do think the rate cut percent chances are still very, very high. And I'm looking forward to actually what's going to happen next. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.